Welcome to TradeTheMBI.com. This is John. This report is for the 5th of July. And, it's more of the same. I mean, we're above the 50%. We've been trading right around the 61%, and we're slightly above that. And we've just called out these zones as they are. The 95 was 50%, 19 and a quarter for the 61. And, of course, we're going to have resistance up around the 48.50. Right in between that now. So plenty of room for price to bounce. Of course, we had the holiday light, and that's still going to continue. We can see that in the beginning of this pre-market, we're already getting to a condition here of the yellow on the extremes, meaning that we're getting the beginnings of some algorithm activity. And with that open range, we could get a lot of flexibility. We've had a decent dip here of the orange in that, and green well above cyan, and critical for that is a -9 on the cyan. -6 and a quarter is bullish from most contexts. So while we've been fighting some negative readings and a short consideration right along the support line, complete resets here of the DOC. Not quite completely as far on the NASDAQ version as on the S&P, but again, the shakeout has turned around and started to present itself from a positive standpoint. Euro breaking above the 23% zone. Actually, the previous 23% was right about here at 1722. We're just below that because what we're getting is a falling highs, but that does attract price higher. So, it's going to push towards that 118. The question is, how fast does the high fall in relation to how quickly price wants to move up? This isn't exactly a stellar configuration, but what you do have is the continual rising red, meaning buildup of long-term buyers, has pushed things a little further. The uncertainty has caused plenty of people to just go to bonds, elevating the price, decreasing the yield, which is just creating all sorts of havoc there. Saudis say they're going to turn on the spigot, and it doesn't really help a whole lot because the manufactured products, as well as the ability to just pump extra oil, is one thing, but you've got to be able to do something with it. And the potential for conflict and things like that, not really having much of a bearing as far as what's going on here at this particular point. You've just got an opportunity where the algo's kicked in back over here, and boom, they're taking advantage of it. And if you don't think price manipulation is possible in big markets, well, it's not that complicated. It just depends on who's doing it. And gold, still in a weak formation. First time we're getting an actual dip below with orange in that, but we're so deep that even if we pop a little bit, we're likely to come back and retrace it. But that secondary move would need to see the DOC red rise well above the -13 for it to really gain any traction. So if we look at what was going on from, right before the 4th to the end of it, we ended up with this series of very interesting setups here where we had all these positive extremes which set up a variety of different levels going all the way back down, even before this. But some of the earliest ones right here were in the 18 range, 20. I like this one right here, which was the beginning of the Azure rising, and it had a low of 2025, which is kind of a target range I was looking for. It fell right back into that one, which left then the bottom side wick of this, the 18 range, still to be filled, and then there's further back at like the 208 range. But then we started to make a ton more of these positive extremes, and a lot of them filled back up, and that left for some really exciting opportunities, because as we started to rise into this, every time you get a positive red one, as I said, it becomes a good opportunity. Whenever you see general weakness, meaning usually you're looking for the steel to dip below cyan. When it starts doing that, when cyan is under red, it's usually an indication of there's some flux in the overall system. What you're looking for long down uptrends, I mean, would be the cyan under red, where you have steel all the way down below, like here, presents a much stronger case. But even within that, you still get the positive extremes to fill. What I thought was interesting about this was anything above that 33 to me was an interesting attack point. You don't know exactly when some of these runs are going to fade off. Certainly you could wait until you ended up with the first green moving below red, even before cyan is crossed back up. I tend to look for these a little earlier than some might, but from my standpoint, the 38, 50 was interesting, but even broader than that was you had this long range of the ABM prior to the reset, which that was right over here, right around that 34 plus range. And then another one at the 38.50 was a previous resistance level. And so right about that point, any shorting right through there on positive extremes that are near the highs becomes very attractive. And in this particular case, didn't require much after that, because once the full DOC spread clearly presented itself in that 35 range, you never got to move back up to the 38, let alone to the 100%, you know. And this is where adjusting stops can become a relative thing, because I'm always suggesting that you have the ability to add 1 to 2 more times within a setup, given anomalies. But in this particular case, just sitting there with this, while it sometimes is difficult to do that, there never came a buy signal throughout any of this. Every cross of the green was met with no orange below red in any of those conditions, meaning any pop you saw there was just an opportunity to short going through. By the time you ended up with the actual buy signal wasn't until right down here, and at that point a white candle comes in. Well, that's, you know, almost 20 some points later, and that just becomes how powerful it is to know that you don't have any buys coming in here that would cause you to even remotely cover, and let alone would cause you to even want to continue to add into any pops that came through. Anytime it expressed weakness with steel and the orange configuration, particularly when the mouth opens. So every time you get the break of the orange going above, gives you a perfect opportunity to attack. And that happened all of these ranges in the 33s, even over here. It was just a little higher at the 35s. And without a buy signal, it's just a matter of leaving the stop and not being too aggressive with it until the breakdown starts to take place. And that's, you know, right below the 50%. You know, you can begin to start thinking about using the long algo as a short stop at that particular point, which eventually, by the time you make it to the lows, we start getting much of the little purple with the gray dots, meaning that we could be getting near the end of it. And then once you have the dip below the red line, and then boom, you're down below the green, and then boom, there the orange happens. Now, in this particular case, the white candle comes in. You don't have to cover at that particular point. You can wait this one out and look for a return back to the low, and know that that's the point where you probably need to trade out at that spot. When you get these darker blue, they tend to be the bullish run. Usually, though, you often, if they're coming right after the white, you'll often get the dip going back down. So it becomes one of those where you definitely have to watch and look for the progression of green over the cyan, and what you need to see is that first dip of the orange, something that we talk about a lot coming off the buy signals, because it's this first dip that becomes the true signal for the turnaround buy. And in this case, it took place at 1475. And as soon as that happens, you ended up with a gold candle right by the 50%, but not above. So you expected a return back down towards those lows, which we did get here in pre-market. That was a nice, easy one to take advantage of. We went all the way down to the 1250, which happened to be even lower than the white candle, filling that one in a second time. And then a bit of a rally starts to take place on the rising shakeout, and then once we got above the 50, you could just go ahead and long that one with an expectation to the 100. And in fact, not only did it make the 100, it actually exceeded the 100. So even if you waited for the close of the bar, you still had opportunities to catch it right around the 61% line, which was at 24. Now we're at 33. So you get 20, 25 points down, another, 5 or 6 to play with in between. Even from the first gold candle, I shorted this one right at that. You had the 22. In this case, took you to the 12.50. Wasn't even worried about getting exact to that point. I was just taking the open of the white candle as a profit target on that one, and that happened to be at 14. So a couple points over, but still excellent from a risk to reward ratio. And then you got the 50% rise all the way. So it's just dozens and dozens of points available. It's just a matter of following what the signals are. Now, in this particular case, could you even buy the blue candle? Yeah, and your stop is got to be a little bit more relative to the range, so it's a little more complex. This is why I like to wait for some of those blues. You've either got to maintain above the 23%, or you've got to find the new setup that takes place within the blue range, like it did once the orange dipped back below red at the higher DOC readings. In this particular case, though, it's interesting. I always look for these. It's that no spark zone that I talked to you about. You had higher DOC readings. You get hit the no spark zone. Oftentimes those will pop and then they fade back again. And that's exactly what happened. And that's why you ended up with those lows, which is why sometimes the ABM acceleration can be too fast when you get this kind of setup in a no spark zone. It wasn't until the next setup of, let me slide this over so we can see it a little clearer, the buy signal that came up right here, right before the 50%, and then boom, that allowed it to go. Because sometimes you don't need to play with this if you're willing to have your stop below the low. In this particular case, when looking at the new buy that came in from the blue, fine, you can do that. It's just a lot of times these take a while, and you would have missed the opportunity of the gold short going down in between. So look for some of those plays. As you can see right now, we're getting the blue dot setups here after the peak highs, meaning probably coming to the end, and we also see positive extremes that have developed early on. In fact, those positive extremes go all the way back. Whoops, what happened there? Didn't mean to do that. First positive extreme, 21.25. So that presents a very nice potential downside range as well. Keep that one in mind. I moved my little blue line. Should be down at my minus 20 for my little, I think I'm in snap mode. No? Well, I'll play with that one later. Yeah, it's definitely in snap mode. There we go. Snap mode just means it'll go to the high and the low, and you can't free float the reading. Right around there. The 21, it could be 21 to 23 for this reversal. I usually look at it because at that point I'm expecting some kind of bounce based on where I'm at with whether I have falling shakeout or not, whether I know that it's going to be dramatic or not, and particularly if I'm at or a new low, then we start to flatten out like we did over here. It's like, it's time to take an opportunity when I see a rising shakeout and I'm at the low. And I'm already dipped below here. I know I'm going to get a little bit of a bounce. Didn't know a white candle was going to come at that particular point back here, but those are a little bit of the subjective things. I still, even if I take part off, I'm still going to be leaving some action to play because you got to be in the market in order to have an opportunity to either add, subtract, or take gains. And if you just wait to always be in, then a lot of times you miss it. You just have to be willing to flip when things change. That's always a critical aspect. But I ran along with this, just wanted to go over some of those details. As always, though, trade well, and it's going to be a little awkward here in this post-holiday until probably the beginning of next week. But look for fund money to start coming in the next day or so. So that should have a buoying effect on price.